Hello and thanks for joining us on TVN Business Update. I am Chiwendu Osisiago. Last week was gloomy for the stock market as coronavirus panic and lower oil price due to selling pushed the market to its worst weekly loss. The Nigerian Stock Exchange All Share Index and market capitalization both depreciated by 13.49% to close the week at 22,733.35 and 11.847 trillion naira respectively. A total turnover of 3.964 billion shares worth 43.703 billion naira in 26,054 deals were traded last week by investors on the floor of the exchange in contrast to a total of 1.814 billion shares valued at over 26 billion naira that exchange hands the previous week in 23,494 deals. Nigerian economy may slide into another recession as the sudden crash in crude oil prices is set to wipe $8.63 billion from the expected earnings accruably to the country in 6 months. Already, the nation has lost over $335.7 million after the crude oil price flagged last week hovering between $30 to $36 per barrel. The crude oil sales make about 90% of foreign exchange earnings in Nigeria. However, the benchmark Brent crude futures trades at $35.44 per barrel on Sunday morning, dropping by 20% slightly above $36 a barrel it traded last week, Monday. Nigerian earned 69.47 billion naira from the solid mineral sector in 2018, the country's highest earnings from the industry in 12 years. The figure is contained in an audit report released on Sunday by the Nigerian Extractive Industry Transparency Initiative. The figure showed an increase of 16.71 billion naira, representing 31.67% over the 2017 revenue of 52.76 billion naira. The 69.47 billion naira earnings also accounted for 16.69% of the total revenue of 416.3 billion naira that occurred to the sector from 2007 to 2018. A breakdown of the receipts showed that the taxes to the Federal Inland Revenue Service accounted for 65.69 billion naira, representing 94.56% of the total. The Central Bank of Nigeria (CBN) is considering interest rate cuts to stimulate growth and protect the economy. Governor of the Apex Bank, Godwin Emefiele, who stated this in Abuja at the growth section held this weekend, explained that the central bank in key markets across the globe have responded by reducing policy rates to stimulate growth, while measures are being taken by fiscal authorities to build resilient buffers to contain the spread of the coronavirus. He said the event was more relevant now than ever before, given that the external headwinds that the economy faces, such as the effects of the trade and technology wars, and more importantly, the recent spread of the coronavirus, which has emerged as a major threat to global growth in 2020. He said the impact of the coronavirus across 100 countries has affected global supply chains as well as demand for goods and services, adding that the International Monetary Fund had earlier this year projected that global growth would rise to 3.3% in 2020, up from 2.9% in 2019. And that's the business update on Television Nigerian. I am Chiwendu Osisiago, and don't forget you can follow, like, and subscribe to all our social media platforms on Facebook, on YouTube, and Twitter at Television Nigerian. Do have a wonderful day.